So it's honestly personal preference. There's no right or wrong.
Yeah, you're kind of right. I'm not even gonna fool around with it. There's nothing wrong with it right now. I don't know why I was thinking about fooling
Well,
around with it.
I think I know why. We can use this as part of the recap. I've seen it before, and you can correct me if I'm wrong, and everybody will do the official intro in a second, is when you've had a loss on a stock or a string of losses, and I was talking with somebody in Market Club Options about this, it messes with your emotions. It stays in the back of your mind subconsciously. You like Macy's, Macy's, Macy's. I don't want the same thing to happen with Macy's. I didn't think
Right.
Macy's would crash like this, but it did. You're thinking, what if AT&T happens? And so you start saying, well, let me protect AT&T when that wasn't even on your table, wasn't part of your trade plan. It's because emotionally you're still affected by the prior loss. And I had a person like that in Market Cup Options that had a string of losses, and then they weren't following the trade plan of their profitable trades. They were to exit on the weekly, but here they were with dailies like, oh, should I get out? Should I? And I was like, it's because you're thinking about the past loss. It's still
Right.
hurting. So am I correct?
Yeah, no, and
Okay.
Macy's is exactly the reason why I was thinking that. Between that and then, like I said, I never had, you and I, you remember in the beginning, I said, well, I'm not worried about
Yeah,
AT&T and
I
having
remember that.
protection, but
Yeah.
now it's not that I'm worried, and I don't like to use that word. I'm not worried about it, but it doesn't make sense to have anything in the back of your mind thinking if the worst case scenario happens. It's easier to live life knowing that you're insured,
Amen
right?
to that, brother.
So
Yeah.
that's kind of what's changed for me. So now I was just trying to, I don't know why I was trying to tinker with, well, I am going to add to my position though. I am going to sell 5 more contracts of cash secured puts to increase my overall. I really
Hmm.
should have done it before, but it's at a decent price point. I'm not, but I'm going to buy my protection this time. This time
Yeah.
I'm going to buy the protection when I sell the cash secured put. So
Hmm.
I'm not screwed. Not screwed. So I'm not doing this again, basically, right? And
Yeah.
then there's peace of mind that over the next 2 years, who cares what happens?
Hmm.
I'm protected, and then the dividend revenue actually will pay for that protection if I do nothing else.
Yes. And
Actually, the dividend revenue, 2 dividends will pay for my two, no, 1 year's dividends will pay for all the protection of 2 years. So
yes, that's
if I do nothing else, and I know some people look at that and say, well, you can't live on that. It's like, well, you go on believing that. I think you can live when you have no debt, and all of a sudden 1 month you're like, here's $6,000, and you only see that once every year. People would
well,
be like, holy crap, that's a lot of money, because
or
that's
like
the
you,
equivalent of it.
excuse me, and like you always say, I was like, okay, if you don't want it, give the money to me then. If you don't want to take it, like, oh, it's what in the class I went to this weekend. Well, first, before I get to that, everybody, we started just we
Sorry.
like to sometimes just start getting warmed up. Welcome again to another weekly recap with Trader Travis and my Success Academy co-trainer Peter. We were talking about insurance and some of his trades, and everything he said was correct. Like that's why I'm like trying to drill this concept of insurance in your brain so much, is because every other area of life, your car, your house, you have insurance, but yeah, no one's taught us to insure our investment portfolios, and I think that's important for the pure peace of mind. The reason Peter's trying to tinker with his trades is not because there's something wrong with him, it's because he doesn't have that peace of mind. And that insurance, yes, it has a cost associated with it, but I call it a peace of mind premium, is because once you have it in place, you won't have that. Tinkering can screw you up. It could work out, but it also could mess up and make your trade more complicated. But if he had insurance, he would have peace of mind. He wouldn't have the need to tinker and try to and potentially maybe screw up his trade. He could make his trade better, but sometimes, at least for me, when I tinker, I screw up things, even make it even worse. So that's why we want to have that. And something else you said, people will you were like people are like, oh, you can't live off that. And the guy I went to investing class this week, the wealthy investor, I took one of his classes in LA, and he talked about people turning their nose up at cover call premium of only $300 because the stock dropped, and of course you have a harder time selling cover calls if it drops and is way below your cost basis. And he was like, well, you can still sell at your cost basis. You'll bring in $200-300, and people are like, they didn't want to take that. He's like, oh, okay, you're to the point now where you turn away money. Oh, you're so rich, you're going to turn away $200-$300. You're like, oh, wow. He was like, isn't this 300 the equivalent of what the stock pays in a dividend? He's like, you guys weren't complaining when you were receiving those dividend checks, right?
That's
He
true.
said, yeah. And I was like, and that's what I was like, boosh. I wrote it down. Like, I had a mindset shift because I was one of those people to be like, I don't know, that's only $300. It's not worth my time. And he was like, you don't get rich turning away money. And I was like, ugh. I was like, wow. So that's why I was like, okay, if they don't want the 300, give it to me. And I was like, ah. So I was like, new breakthroughs require new mentors. So people always wonder, well, why are you taking a class, Travis, when you're the teachers? That's why. It's because new breakthroughs require new mentors. And I want to break through certain levels I'm at. So anyway, with that, we got to hurry up. I have a dentist appointment.
So I'm going to cover real quick what I did. I don't have a ton of trades. I did open some new positions though. I'm just looking at I think I screwed something up here. I don't know why that looks that way, that June. But anyway, yeah, no, actually that is right. Okay, so there's my new position. So these are all my verticals. I did some verticals on SPY, and I think they're already. I mean, these things had 28 days or so when I placed them, and I think they're already out of the money, which is kind of good. They're at like a 15% gain, so that's looking good for me. But the way the stock market's been, who knows what's going to happen. But that kind of increased my revenue for June a little bit more. So that's what I'm focusing on. I'm focusing on my revenue for June. We're almost done, so I'll try and get, if I can, I'll try and generate a little bit more revenue. I'll still keep my risk parameters the same. My July revenue, I've started to work on. It's really low because those Nike trades were really July type trades. So, and those things were kind of a big loss. So I did do SPX. This is my first SPX trade. So I'm kind of excited about the fact that I did SPX because SPX is one that if you have a smaller trading account, I don't know that you can look at them because the risk can be a little bit higher than what you're expecting. But what was cool, I was looking at SPX today and it's already way out of the money for me. So that's kind of cool. And then you can see I sold some Walmart verticals. I just need Walmart to get above 110. I think it was at 108 today. So it's looking good. I did these all based on Market Club. They all, they triggered the Walmart's triggered, except for SPY. Sorry, I didn't use Market Club for SPY. SPY, I'm anticipating Market Club. I haven't looked at it today. I'm anticipating it, but I used my DMA template, a template we were taught a long time ago. It crossed back up and it gave me a signal that I could get in, so I did. And that's it. That's pretty much it. I'm looking at some of my other trades that I'm looking at. I was looking at Costco, although I wasn't a big fan of the open interest on some of the time frames that I wanted to trade in. It had better open interest in time frames I wasn't looking to trade in, but I may do that anyway. I'm starting to look at some longer term credit spreads, so I'm going to kind of take once I do the research on one stock for the price point, I'm going to do what Travis does, and I'm just going to span those out over 3 or 4 months. So I'll do the same strike prices all the way down. So like I'll do it in July, August, September. I had some notes that I was putting up. Yeah, so my AT&T, I'll cover that real quick. It's in the money by a few, by like 30 cents right now. So I'll probably end up buying that back to avoid my exercise. But here's what I'm going to tell you. The reason I'm not solidified on that is because if AT&T's at $32.30 at expiration, I'll just let it go because I lose 30 cents. So I'll lose $1.50, I think, an actual $1.50, and I'll just buy it back at 32 or 33, whatever I can buy it back at. So I'm not worried about that. And I am going to increase what Travis and I were talking about. I am going to increase my shares by another 500. So I'm going to do that as well. And then that's it. So that pretty much covers everything I'm working on. And as we go through our weeklies, I'll show you more of what I've placed.
Wow, they're going to be surprised that both of us are going to be quick this week. That's what an appointment does. It forces you to be expedient. So I have about 5 minutes and I have to go to make sure I'm going to be on time. So actually, I probably want to. Oh, can you see my screen, Peter?
Yeah.
Okay.
Your growth is crazy.
No, actually, I'm going to officially X that growth today, and I'll explain it. So before I get to that, actually, and I'll explain why. Two things though, Peter. You might want to check the DMA template again. I didn't see the crosses. So double check that. We don't have to talk about it now, but double check it to make sure your settings are correct. Because I didn't. I just double checked it as you were talking. I was like, I didn't see a cross, and on my charts it doesn't show a cross. Gosh, where's it at? Oh, S&P.
Oh, you're right. No, you're right. It doesn't. I think I was just being So
you were anticipating a cross.
I was anticipating, and being very, very aggressive that we're going to see a weekly. It might bite me in the butt. I was just trying to be a little bit more aggressive on my trade.
I know, and I was like, oh, that means the market's going to crash. No, actually, that's what I wanted to talk about is because you're right. The S&P did trigger for a new weekly trade triangle. So of course, my charts know I have to go, so they want to take their slow time this morning. Like, seriously. All right, how about this? I'll keep talking. We'll wait for the charts to catch up. All right. Internal server error. Have you been having trouble with Market Clubs?
Every now and again, I do. I didn't go into it today to see what it's doing, but yeah.
Yeah. Okay. Well, now they're pulling up. So basically, it triggered a new weekly green trade triangle. For those who are not members of Market Club, it's just a buy or sell signal. For this is for us telling us we can get back into the market now. Things are back to normal. It is an intermediate term signal, meaning that in the next few weeks, what the market might do. So here we go. So we can see that. But as I explained to Success Academy members, I think yesterday, I put on my Excel, my trade journal Excel, where they get to peek over and see all of my trades, is that I don't trust it. I don't know why. I don't trust it. I don't think it's going to last. But the beauty here is we don't trade based on how we feel. That could really screw you up. So I trade what I see. I see a signal, I'm getting into it. And so I have a list of stocks I'm going to trade, even though I feel uncomfortable. So what I can do is to address that uncomfortableness or that uneasiness I have is just risk less money. That way I'm still in the game to make money. If I'm completely wrong and the market shoots higher from now, I'm completely wrong. I won't feel like a dummy. I'm like, well, I'm in the market. I'll trade what I see. But if I'm right, my intuition is right, and the market does fall from here, then I'm only going to lose a tiny bit of money. So you'll notice that in my Excel. So you'll notice my 2% risk amount is about $1,000 as of now, but I'm risking like 600. So I'm risking way less than my user risk amount. And so now that's what I want to come here. Peter talked about this 122% increase in the account. Well, I'm going to exit out. This is too unreal for people, even though it's real gains. The members they saw me do this all year long, but I think it's too unreal for people. And then people start to be like, they start beating themselves up if they're not doing the same thing, which you shouldn't be doing the same thing anyway, because you're not me. You should be comparing yourself to you. Are you better than you were last year? That's what really matters. But I'm going to X out this game. And what do I mean by that? Well, I'm going to go ahead and take out some growth profits. I'm going to assume I'm going to lose on all of my call option trades, which is not likely to happen. But we're going to go ahead and do that because you just never know, especially if the market crashes. I'm also going to X out my insurance here, and let's assume I paid full cost for my insurance. The way I do insurance is I buy it and then try to figure out how to pay for it later. So when you back out all of those, now the growth or the increase in the account is only 58%. So from this point on, I'm going to leave it there. So I'm going to, if you notice what just happened is all of my profits so far this year is already paid for my insurance in the first 6 months of the year. That's not usually how it happens. Actually, it usually takes about 8 months for me to recoup the cost of my insurance. And the insurance is a 2 or 3 year insurance policy. So I have 2 to 3 years of profit. So all I'm doing is pretty much, the summary is I'm fast forwarding that 100% growth you see to another year. Because when I actually exercise my insurance, you're going to see a big fat lump sum of money come back into my account. and it's going to boost my profits for that particular year. So I'm just going to postpone that huge gain you just saw to later on during the year. Does that make sense, Peter?
Yeah, it does. I don't like it. But...
I know you never do.
Well, the only reason is because I get where you're coming from, but the only reason I don't agree with it is, or I don't like it. It's not that I don't agree with it, but I don't like it because it's the reality is the figures are the other way around.
Yeah. Because my assurance, well, everything except the growth trades. The growth trades, once I close those out, it will boost up this number here. But the insurance you do pay this year, like I paid for it this year. So that's real. The only unreal part is, yeah, but that cost doesn't have to be factored in until I exercise my insurance, because I'm going to get most of that money back anyway. So that's the only one part. But yeah, the growth trades, once I close those out, yeah, this will bump back up. But I do want to X out my insurance because my profits have already paid for it. I want to take it off the books is a cost and done. All right. So with that, I have to run, but I do want to let you know I have to run first to the dentist, and then after the dentist, I have to go, unfortunately, get tires. I guess I can't say unfortunately, it's a first world problem. I'm getting new tires for the RV, which is going to be, guess what? And anybody's been following me for a long time, when I'm in the car or tire shop, what happens, right? I'm placing trades because to try to get the stock market to pay for our expenses, sort of like the stock market paid for our recent cruise. RV tires, I didn't realize were super expensive, like $3,000 or $3,500 about. So I was like, oh my goodness. I was like, yeah, I didn't budget for that. So I was like, all right, stock market, time to pay for some tires. So I have a list of stocks I'm showing you right here. I don't know if I'll place it on all of these. These just, usually I only share this with members, or all the stocks I'm looking at. But here's some of the stocks I'm targeting to place trades on to help pay for these expensive tires that we're about to put on. So anyway, I just wanted to share that. It's been a long time since I've shared stocks with the general public. Of course, as a Success Academy member, you get access to all of my hot stocks every single week. So I hope you all are benefiting from that and using some of those stocks. I think Peter has, because Walmart was one of them, and you just placed a trade on it. So but hey, Peter's smart. It's like, if I've already done all the work, you're just saving time. You're going to do the work yourself too. So you're just saving time. I've already taught you the blueprint, how to sift for stocks, but if somebody's already done all the work, then you can choose if you want to use one of those stocks. So that's it. So that's all I have. So this is our quickest.
Why is Apple and McDonald's in parentheses?
Oh, great question. Their ratings are lower, but they're Apple and McDonald's. So they they have entry signals, but when I look up their fundamentals, their earnings per share, all that other stuff, they have lower ratings. So I put them in parentheses to say, well, you can decide if you still want to trade those. They're our favorite stocks. We're always trading them. McDonald's is one of the only stocks that actually is immune to crashes and corrections. And if you don't believe me, look it up. Look up the last 20 years and see what happened to McDonald's. So it's one of those stocks that it weathers storms really well. So I put in parentheses to say it had a new signal, but the ratings is low. And so you can decide if you want to trade those. I'm okay with it because, again, it's Apple and McDonald's. If it was some unnamed, unheard of company like Zen, I don't know what Zen is. If it was some company like that, wasn't popular, I wouldn't even bother with it. But thank you for that question. That was actually a great question. And that's why I put them in the parentheses to remind me, which I still forgot, to talk about that. So
that's what I'm here for.
There you go. Well, this is amazing. This is our quickest recap ever. So everybody, I hope you found some value in our expedient recap this week. As always, if you have any questions, let us know. If you're watching this on YouTube, make sure you subscribe so you can get more notifications when we release more videos. And if you're a Success Academy member and you're not having the growth that you see in my account, you have to reach out to us. You can't suffer in silence. And more importantly, you have to show up. That's the most important part. I am getting wind of some members aren't showing up and implementing and watching all the training. So you're missing out. These little nuggets like price point profits, Peter talked about how I do it. That's a bonus. That was a limited time bonus I released last year. Well, guess what? The people who didn't show up and watch that, they missed out, and they missed out on all the profit they could have made by implementing that. I will be releasing that bonus again at the end of this year for those who missed out. but it'll only be available for a couple of weeks. And so I want to reward those who are showing up and also encourage you and entice you to start showing up more. Because as I explained to my wife and sons this morning before I left the house, when you don't show up, you don't make money, right? The more you commit to money and wealth, the more money and wealth commits to you, the more you will make. And with that, you all take care, and we'll see you next week. All right, bye-bye.
Yeah.